Banking stocks are absolutely ripping today. As you might have seen, all banking stocks seem to be in the green, with popular stocks such as Morgan Stanley up 6.45%, Bank of America up 4%, and even companies like Goldman Sachs up 3%. You might have seen an increase in your portfolio. But you might be wondering why banking stocks are up today. Today I'm going to go through a few articles and break down my thoughts as well on why you see the recent success of banking stocks. The first article I wanted to go through was from CNBC, and it talks about the investment banking seeing signs of life. As touched on earlier, Morgan Stanley shares jumped 6.45% after the bank reported better than expected second quarter earnings and revenue. More on that later. Revenue climbed 2% to $13.46 billion, boosted by a 16% increase in wealth management revenue. Profits declined 13% to $2.18 billion from the year earlier, but investors took comfort in the CEO, James Gorman's comments that the upcoming quarter looks more constructive. Bank of America investors pushed Bank of American shares up 4.42% on the bank's earnings and revenue beat for the second quarter. Both figures were also higher on year. Profits rose 19% to $7.41 billion, whilst revenue increased 11% to $25.33 billion, helped by a 14% jump in net interest income. The bottom line, in other signs, the US economy is more resilient than anticipated. Banks have had good earnings seasons. Yes, big banks like JP Morgan Chase, Morgan Stanley, and Bank of America are supposed to benefit from higher interest rates that failed regional banks such as Silicon Valley Bank and First Republic. But investment banking activity, which slowed as higher interest rates kicked in last year, is seeing signs of revival. JP Morgan's investment banking revenue beat estimates, as seen as well with investment banking fees at Bank of America increasing from 7% to $1.2 billion. And while Morgan Stanley didn't do so well on the investment banking front, James Gorman said he believes we are very, very close to the end of rate hikes. That would give the banking sector more stable grounds on which to operate and rebuild. Going through, Morgan Stanley is the one that was up 6% and up the most compared to its banking compatriots. Morgan Stanley profits beat estimates as growth in its wealth management business offset lower trading revenues in the second quarter, and executives expressed optimism about economic environment. Morgan Stanley shares rose more than 6%, shrugging off the 14% drop in profits. Excluding one-off items, Morgan Stanley earned $1.24 a share on revenue on the $13.46 billion, comfortably beating estimates of $1.15 a share on $13.08 billion in revenue. We ended the quarter overall in a better place with a better tone, said the CEO. After the period started with uncertainty over the banking crisis, geopolitical tensions, and the path of the US interest rates. The wealth management unit revenue grew 16% on a record $6.7 billion for the quarter and gained almost $90 billion in new assets. Those results helped smooth the drop in trading revenues as volatility declined. Fixed income revenue sank 31%, while equities fell 14%. Morgan Stanley's earnings also eroded by $300 million in the severance costs after the bank laid off thousands of employees this year. Revenue from investment banking was flat at $1.16 billion. The results appear much more than feared in the challenging environment, UBS analysts have noted. Having a quick look through the banking stocks, you can see across the board everything is seeing green today. Even stocks such as JP Morgan, which has already reported and is only up a little bit, is in the green. There seems to be a strong positive sentiment around banking stocks. As someone who has owned banking stocks in their portfolio and currently owns JP Morgan, this is something I'm happy with. Higher interest rates obviously mean that banks can charge more on their loans and their overall lending, resulting in hopefully more profit for the bank and hopefully more money coming back to the shareholders. Again, this is a bit controversial, with people experiencing a cost of living crisis, but from just a strictly shareholder perspective, it's good to see the bank doing strong profits. Even in my Australian portfolio, a lot of my big positions are made up of banking stocks here in Australia. Looking through the holdings of my biggest Australian position, you can see the likes of, like I said, CommBank taking up 13%, National Bank taking up 6%, Westpac 5%, and ANZ 5%, even Macquarie. banking stocks make up a big amount of my portfolio and is something I keep my eye on. Goldman Sachs is a position that I used to own. It was a long time ago, and I ended up actually selling it for a good profit. I sold it well before it dipped, and again, it is something that I've looked into, but it's something I'd have to do an analysis on to see if I think it's reasonably priced to add to my portfolio, especially when I have exposure into banking stocks such as JP Morgan. Overall, you can see the strong results that the banks have posted, and the overall market bounced back this year. If you're invested into any banking stocks, you've obviously seen a nice come up in the last few months. Leave your thoughts on if you're going to invest into any banking stocks or if you're selling out and locking in your gains. This was just my thoughts and a quick review on why the market is seeing green.